Welcome to our channel. Today, we're diving into the intriguing world of stock shorting. Shorting stocks might sound complex, but it's a fascinating investment strategy. Let's break it down. In a typical investment, you buy a stock hoping its price will rise. With short selling, you're essentially betting that the stock's price will fall. Here's how it works. An investor borrows shares of a stock they believe will decrease in value from a broker. They then sell these borrowed shares at the current market price. The hope is that over time, the stock's price will drop. When this happens, the investor buys the same number of shares back at the lower price and returns them to the broker. So, if the stock price drops as anticipated, the investor profits from the difference between the selling price and the lower buying price. But if the stock price goes up instead, they could face significant losses. Unlike regular stock buying, where the maximum loss is the amount invested, short selling has theoretically unlimited risk. That's because a stock's price can keep rising indefinitely. Investors need to be mindful of a few things. Firstly, the cost of borrowing shares can add up, eating into potential profits. Secondly, brokers may require a margin account and collateral, increasing the risk. If the stock's price rises too much, brokers might initiate a margin call, requiring the investor to add funds or close their position at a loss. Short selling also influences the market. When many investors short a stock, it can create downward pressure on the stock's price. However, if the price unexpectedly rises, it might lead to a short squeeze. In a short squeeze, short sellers rush to buy shares to cover their positions, driving the price even higher. In essence, shorting stocks is a strategy best suited for those with a strong understanding of market dynamics and a high tolerance for risk. It can be a useful tool for hedging or speculating, but requires careful consideration and monitoring. Always do your research and consider consulting with a financial advisor before diving into short selling. Thanks for watching, and don't forget to like and subscribe for more insights into the world of finance.